Today what we're going to be talking about is market structure. So, I'm just going to break down market structure to you guys to the simplest level that it will be very, very understandable. Do you understand? I think forex trading here, you don't have to complicate things for yourself because complication, see, there are a lot of complication in forex. So I don't blame anybody, but the thing is, once you start seeing things the right way, you know what to do. Do you understand? And a lot of things that actually put so many people off is just confusion. Do you understand? So generally, in forex trading, we have three type of market structure. I've been saying this over and over again. We have three types of market structure. Basically, is even two type of market structure, but it's just that one has the uptrend, one has the downtrend. So that's why we say we have three type of market structure. So the first type of market structure is trending markets. Then the second one is ranging market. But under the trending market, we have the uptrend and the downtrend. So that's why I would say we have three type of market structure because of the uptrend, which is the bullish movement, and the bearish movement. Then we'll have the market that ranges, that just move within a zone. Do you understand? So when we talk about the trending market, we'll talk about breaking structure to the upside or maybe breaking structure to the downside, either of one of them. So let's just say, okay, we're talking about market structure. So with market structure now, we're talking about the uptrend. So uptrend is when the market is making higher highs, higher lows, higher highs, higher lows, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. This is a bullish market, and this is uptrend. Do you understand? This is a bullish market. So once the market is breaking structure to the upside, that is a clear bullish market. Do you understand? So when we talk about the bearish market, which is the downtrend, the market is making lower highs, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. This is a bearish market because the market is breaking structure to the downside. You don't have to complicate things for yourself. Basically, just take it very, very simple. Bullish market is when the market is breaking structure to the upside, making higher highs, higher lows. Then bearish trend is when the market is breaking structure to the downside, making lower highs, lower lows. Then the ranging market is when market is moving in a zone. You just market making movement within a particular zone. It's not going up, it's not going down, just moving in a zone. Basically, maybe for a period of time before it will eventually break structure to the upside, maybe retest, then go up, or break structure to the downside, or you see something like this. This is one possible way. This is another one. I'm just giving you examples of what could happen in a ranging market. Then you see another one is either breaking structure to the downside, like sorry, moving in a zone, like something like this, in a zone, break structure to the downside, retest, and continue moving down. Do you understand? So ranging markets, if you're on the market, depend on the direction you see the market at that time and what the market is doing. But ranging market will just be in a zone until it gives you a breakout to the upside or the downside. Do you understand? So we have three types of market structure: the bullish trend, the bearish trend, and the ranging market. You don't have to complicate things for yourself. So the most common type of market structure that people trade is the trending market. It's not like We don't trade no, sorry, it's not like we don't trade the ranging market. We all trade the ranging market as well. If you know your strategy and you see your setup inside the ranging market, you can get into the market. But the easiest and the most comfortable trade pattern and market structure that we traders use, most traders use, especially, okay, let me speak for myself, I use is the trending market. When the market is trending, it's very very clear and obvious for you to anticipate something from a particular level or a particular zone. Do you understand? There are people that trade other block levels, breaker block levels. There are people that trade fair value gap. So there are people that trade fib retracement. If you bring out your fib at this zone, it's the same thing with breaker block or other block level. Do you understand? So everything still comes down to the particular trend of the market. Everything still comes down to the particular trend of the market. So right now, um, what you're going to be looking for is, okay, I see a market that's trending to the upside, like breaking structures to the upside. What does that tell you? Right now, you know that this market is bullish. What do you have to do in a bullish market? In a bullish market, what you should be looking for is buys. That is it. When you see a bullish market, what you should be looking for is buys. Then, when the market is breaking structure to the downside, when you have something like this, a market is breaking structure to the downside, lower low, lower highs, lower low. What does it tell you? This tells you that the market is selling. And what you should be looking for at this level is for you to sell. So this is where your strategy comes in. First thing first, when you understand the structure of the market, then you cannot know what to do. But if you don't understand the structure of the market, you will be confused because you don't know if you should be buying or selling. Do you understand? So as a beginner, I don't know, for advanced traders, what we do is, when we see a trending market, we can buy a trading market to the upside, we can buy and we can sell as well. Yes, advanced traders do that because they already know the level the market is going to get to. The market is going to get to before it will retrace down. So they can jump into the sell from this zone to this zone and come out. But as a beginner, you don't have to focus on the retracement. Your focus should be, for now, your focus should be on the impulsive move. How can you join the impulsive move? Okay, so when the market gives you a higher high, higher low, and you're anticipating a higher high, then a higher low, your interest should be, when the market is at this level, what am I looking for to continue buying to the upside? That's what you should be looking for. Same thing with a downtrend. Focus on the impulsive moves. Impulsive moves. The market is at this level. What am I looking for to sell down? Do you understand? So when you understand the market structure, it will be easy for you to incorporate your strategy. But if you don't understand market structure, it's going to fuck you up because you're going to be struggling when people are buying, you're selling. When people are selling, you're buying. Do you understand? So when you go to the, and always look for your structure on the higher time frame, 4 hour, daily time frame, weekly time frame, depending on the type of trader you are. Do you understand? So when you look at your structure and you see your structure clearly, what you should understand is, for every trending market, there is a zone the market will get to and it will retrace down. Do you understand? They'll give you a retracement to the downside for for the buy to continue. Do you understand? So right now your interest should be, when the market start coming down, how do I get in into this impulsive move? That should be your interest. Then same thing with the bearish market. When the market starts moving down, how do I get into this sell down? That's where your strategy comes in. Do you understand? So market structure is just three. There are just three types of market structure: the bullish, the bearish, and the ranging market. That's everything about the forex trading. So don't think that when you open your chart you start looking for magic. No, there's no magic. The only thing you look for is structure. Every time there is structure, there's structure around here, there is structure around here, there's structure around here. So every time you open your chart, what you see is structures everywhere. So what is the market doing at the moment? Is it buying? Is it selling? Is it going up? Is it going down? Just look at it. Look at it in a way that you don't have to stress yourself that much. Do you understand? So there's structure everywhere just for you to know that, okay, this is a bullish trend. This is a bearish trend. I think I should be buying. I think I should be selling. There's structures everywhere. Do you understand? So for beginners traders, the first thing you should understand is, what is market structure? What is market structure? Because that is, this candlesticks that you're seeing up and down is structure. So what are these structure? What type of structure is this? Is this market buying? Is this market selling? Am I supposed to be buying? Am I supposed to be selling? You have to do this on the higher time frame, because if you look for your structure on the higher time frame, for example, this is a structure on the higher time frame, 4 hour. 4 hour time frame, maybe the market is at this level and gives you your reversal pattern to go up, you know, you can continue buying this market for the next couple of days. It might not get to this zone just one day, but you already have a general idea, general bias of the market. You already know that this market is buying to the upside. So anything that I'm doing at this zone requires me to buy. I'm not going to be selling in this market, because if you sell in this market, market will take you out, because market is going up to take out this guy. So that's why it's very important for you to know what market structure is. So even if you decide to sell, your sale is going to be a temporary sale. And if you decide to buy, your buy is going to be for long, because you already know that the direction of the market is bullish. And even if your sell is going to be a short sell, because the market is bullish, and everything that has to do with a bullish trend is buys. Do you understand? So yeah, so this is everything I have to say about market structure just now. So maybe after, maybe probably still go deeper, maybe emphasize more on market structure, but this is all I have to say on this video. So next time I will talk about something else. Thank you.